shares. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom, how are you, man?
I'm doing great, man. Yourself?
Good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. We're going to be joined today by Tim Ord of the Ord Oracle in the second and third segment. Basically sideways right now in the SPY, but quite a lot of, I say volatility, but I mean, you see in the beginning of the day, right? I mean, you had a massive sell-off. You had some movement to the upside, hit that 570.90, and then just kind of steady selling. It's just like a weak kind of market. To be honest, you have a lot of questions going around now about the validity, or at least the necessity, of spending as much as some of these hyperscalers are spending on data centers. You know, that was a big portion of this play, at least in the market, and that's kind of evaporating a little bit. And again, whether or not that's accurate, of course, you have Alibaba's CEO talking about it. I'm sure he has his own reasons for saying those things that are not solely, just an objective analysis. But no doubt these are things that got tons of money pumped in, right? And if it comes out that, hey, listen, we can really just get this kind of consumer A out on things, like distilled versions, it really does bring into question, is that necessary? So, I think probably needs some more data. Something that is important to bring up is, at least with CoreWeave, right? They're having their IPO launching. Let's pull it up. They've reduced. One second here. We're going to pull this up. CoreWeave IPO. They're downsizing the IPO, which is intense, right? $40 share with a $250 million order. It was initially going to be $55 per share. This thing was getting valued at like 30 billion or something along those lines. And now it's going to be roughly 20-something billion. Its IPO prospectus earlier this month, CoreWeave said 2024 revenue jumped more than 700% to $1.92 billion. The company recorded a net loss of $863 million. The company also said 77% of its revenue came from two customers, Microsoft accounting for 62%. So that got me a little bit worried with Nebius as well. And I have been kind of getting myself out of it now. It is up 1.62% today, which is very good. But, I think this is now, one, you kind of have to, revise what you want this to be, because a lot of what you were pricing Nebius off of was what CoreWeave was, right? So you're looking at CoreWeave's kind of revenue to, valuation, like market cap, essentially. I can't say CoreWeave has a market cap because not, but you kind of get what I'm saying. The potential initial market cap of it. And its revenue, and you're kind of extrapolating that to Nebius. Well, that's coming down, and so, until we can start seeing some more stuff from Nebius, I think this is going to be a tough ride. But it is good today. And you can see at least today, you had a massive sell-off to that 23.05, and it's been slowly climbing up since then. If you look at the 1 year, I mean, what makes me nervous about this chart is it looks like you're trying to close that gap right there. And it absolutely can have the energy to do that, if we take a turn tomorrow to PCE. But I mean, you're looking at a gap at least like around the 22 level. And that can get really hairy for Nebius. Additionally, any kind of deflation just in the sentiment of investing in data centers is going to harm Nebius, right? Now, I still have a lot of faith in the management. I think they have other things they can lean on as well, at least, to get investors excited with like AV Ride. And they're the only group out in, Europe really doing this in a meaningful way. But still haven't heard a lot of conversation in Europe of getting, reducing kind of regulations around AI. There is some Magna Euro AI they're trying to develop, but they have an issue. The European Union has an issue with very slow bureaucracy. That's a huge speculation. But as it stands now, like if you're in Nebius, just kind of watch what's going on with the rest of the market. I think this is a tough time right now. I mean, it's the same thing with like Nvidia, right? I mean, Nvidia's coming off today. It's just a weak market. I think you're just having liquidity leave. And I think these data center AI stocks are prime targets to go lower because it's where a lot of the a lot of the liquidity was kind of put into, all right? So when you're off 1.17, a lot of people are saying, hey man, like this is a great time to buy. And it's like, I don't think it's a great time to buy much of any equity in the market right now until things become a little bit clearer with tariffs, certainly become a little bit clearer with how those tariffs influence inflation, because I don't believe it's going to make much sense to lower interest rates, but it's almost like the Fed kind of has to, right? And I think that will make inflation worse at a time where the GDP is experiencing contracting growth, at least target wise, and I think the tariffs also can kind of contract growth. So yeah, I don't know. I think right now it's just kind of, I'm definitely not buying much of anything. Some of the junior miners were very interesting. NAC has been seeing some fantastic movement to the upside over the past few days. You had about 2 days of breathing there. Even today a little bit, you're a little bit lower, but this is rallied up 5.91. Goro is not doing as well today, but still up 3.35%. Almost like double topping a little bit, which is kind of spooky. Yeah, I don't know. I think this is just a weird time. We have PCE tomorrow. That's going to, mean a lot. But if you guys have a different opinion or perspective on this, let me know. But it's, if you're getting higher inflation targets, right, for the year, what sense does it make for the Fed to, and the economy is obviously still somewhat resilient. We're starting to see cracks, definitely, with downward revision in GDP. But what sense does it make to get to, something like a 3.9% federal fund rate? I also don't see, what is the 10-year doing right now? So, you're off a little bit. You're hovering around 4.3. So anyways, folks, you stay right there. We'll be right back with Tim Ward after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Okay, welcome back, everybody. Take a look at it right now. Looks like you're getting a little bit of a flip here. The SPY up about 0.11% right now. You're getting some buying. Composite doing a little bit better as well with the Dow Jones Industrial. Gold has been doing fantastic today, pushing near those all-time highs. We're just a little bit under that, about what, $3 or something like that. It's pretty impressive. Trading at $3,099, you're up 1.53%. Silver trading up 3.22, cracking that 35 level. That's amazing movement for silver. And then copper coming off just a little bit, trading at 5.12. Definitely a little bit of sell-off in copper today. It is a Thursday. Let's move over right now to ord-oracle.com. Every Tuesday and Thursday, we are joined by Tim Ord. You can check out his website, ord-oracle.com. You can also check out our past interviews on our YouTube channel, Tiger Financial News Network. Just type in Tim Ord, Jacob Shoup, and you should be able to find those. Additionally, you can go to TFNN.com.
Hello.
Tim, how you doing? I'm
good.
I'm pumping your services here. We got 2 webinars from you, Tim, as well.
Keep pumping. That's fine with me.
Tim, how's it going?
Good. Let's take a look at the market.
Yeah.
Anyhow, I showed this last time. I took a smaller time frame instead of going back to 2009. I'm just going back to 2015, and you can kind of see they're basically all of them came at significant lows, at least multi-week lows. And this is the reading, current readings. Today's reading, we're at 0.41, and this is actually the middle chart is the American Association of Individual Investors Bull-Bear Ratio, and it's a 3-week average. So this has stayed this low for 3 weeks, and we're at 0.41 right now. I think below 0.75 is bullish. So everybody's just leaning on the bearish side, which is really good for rallies. Markets go up what they call a wall of worry. Market's always worried about something, and evidently is worried about tariffs because of
Yes.
As long as there's worry, if everybody's not worried, that's the time to worry. So, and right now you got enough worry to spur a rally here. How big a rally? That's why I'm hoping we see a sign of strength off this low. And if we do, a sign of strength is basically big volume and a really positive advanced decline line. And right now we don't have that. But we could still be early in the rally too, so we'll have to wait and see if that develops or not.
Okay.
But if it does envelop, then this whole year is going to be good. If it doesn't envelop, then we're probably in some sort of a big trading range. So we'll see how it goes. But anyhow, either way, we're at some sort of a low right here, right now. And actually, that low was last week.
Okay.
But anyhow, it's still at a low. We still got further to go to the upside. And we'll look at the shorter term picture here, too, to show where we are. But this indicator, anyhow, the top window is the VIX. Next window down is the SPX. It's the Standard & Poor's 500 on the weekly time frame. And it's a really easy indicator to follow. Every time you get a close below or close above the upper Bollinger Band on the weekly time frame, you're usually at an near midterm low, and that happened a couple of weeks ago. Matter of fact, it even happened last week. If you look over here in the right window, we got the open close below the lower Bollinger Band, and actually the week before we did the same thing. We open and close below the Bollinger Band. So that's one signal. The next signal is the one below it, which is the weekly VIX. So this is a weekly time frame. So it's you're not looking at daily. So you're looking, instead of a multi-day rally, the weeklies look at a multi-week rally. So we think this rally at least gets into April, maybe longer, don't know. But anyhow, the signal for the weekly is the VIX. You're getting above or below the, if you get above the upper Bollinger Band, that comes at lows. If you get below the lower Bollinger Band, we actually don't have them any right here, you're usually at a high. And last couple of weeks ago, we got below the lower Bollinger Band. And last time we did that was basically October of 2023. So it's kind of a rare signal. You don't get them a lot, but you get them 1 or 2 years at most. And so, these are all the other signals, but we got two signals here. We got a weekly VIX above the upper Bollinger Band, and you got the S&P closed below the lower Bollinger Band. And so that's kind of a double signal. That's what I like to do. I don't use one indicator. I try to get multiple indicators on signals. Sure. The dailies kind of blew out, so I had to flip to the weeklies to see where we are. But now the weeklies have flipped bullish, so we got a multi-week rally starting here. So let's look at the shorter term picture. Yeah. Here's another. The bottom window is the SPX VIX ratio on a daily. This is a daily chart. And it did get some bearish signs up there. I did see that, but I didn't take that signal. It would have been good if it did, but it didn't. And yeah, we're actually still long here. But even on the dailies here, we're getting positive signs. Here the S&Ps make lower lows. The SPX VIX ratio makes higher lows. That's bullish. And now we had a big gap up on Monday. A lot of times you come down and test those gaps. And as long as you test those gaps on lighter volume, here's the volume on the gap, which is here. And yesterday's volume came in here. It's about 20% less. And the only thing you need about 10% less on a test of a previous high or whatever, or a gap, then that gap has support. So, and today we're kind of still in the gap, probably just closing the gap here. But this gap should find support, and at least we're going to go back up to this gap, if not keep going higher. So we'll kind of wait and see what develops. But probably, my guess today is probably a low. Tomorrow, I bet tomorrow's an up day. Next week, I think it's going to be up, and the week after is probably going to be up. So this is probably a multi-week rally. How we go? I hope we go back to the gap up here. We'll have to wait and see. But anyhow, I'm long. I have no reason to be out of this market. I should have actually, that's a long story. I'm still long. And for the moment, I'm still long. I see bullish signs here. So I still expect the rally in general to continue. So
let me ask you real quick. You have the arrows pointing down to the volume bars on those two candles. That is what's telling you that we're just filling a gap and will most likely go up to that, I don't know what you're talking, it's about 580, correct?
Yeah. Actually, I do, in my book, I talk about a lot of highs and lows and gaps and whatever. But as long as you test the gap on at least 10% lighter volume, that gap's going to hold support. And I forgot what numbers these were, but this is about from the volume on this day compared to volume going into the gap on this day, it was like 15% lighter.
I see.
And as long as it's 10% lighter, that gap's going to hold support. To get through a gap, if the gap has test of equal volume, that gap does not have support. It's going to keep going down. So you can think energy as volume as energy in the market. So if it's got energy pushing whatever direction it's pushing, that's the way the market's going to go. So if the market rallies up on higher volume compared to the down volume, it rallies up and vice versa.
I see.
So there's volume is a big part of my analysis here. So and I think today's volume, it's going to be lighter than probably yesterday's volume. So that's another good sign because today you're testing yesterday's low.
Fantastic. Tim,
Right.
yeah. Can you stay right there? We'll go into the next break. Fantastic. Folks, stay right there. I'll be right back with Tim Ward.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. We're joined right now by Tim Ord of the Ord Oracle. Tim, you brought up something about your book. discuss a certain topic. Guys, you can go to his website at oracle.com. Just click that book tab right there. Additionally, you can click newsletter as well. Get access to all of that. Tim, before we went to the break, we were looking at the SPY potential for this kind of to be a bottom right here, just closing the gap and then movement back up to that gap from it looks like about March 10th.
Right. Okay. I guess one of your listeners,
yes,
our listeners, I guess, talked about the trend. Yes. And that is true. The trend right now is not giving a lot of information. The 10-day trend, I don't have it right in front of me, but it's basically neutral, somewhere around one or less. And same with the 5-day, 3-day, 2-day. Actually, the 1 day today, we're actually doing pretty good. And it makes sense because we're probably at a short-term low here. But on the bigger time frames, the 5 and 10-day trend are not showing a lot of fear. Fear in the market is actually bullish. The more fear you have, and that's a trend reading of 1.2 or higher. And if you got a 10-day trend, that's like 2 weeks of trend fear. And that's really a lot of fuel for the market to drive it higher.
Sure.
And that's one thing on an intermediate term basis here. We don't have the fear. We have a consensus, or we have very similar readings, but that's different than actual fear in the market. Fear are people that are actually betting their money, and we just don't have it. So intermediate term wise, a 10-day trend at best neutral here is not a good sign for intermediate term. So I'm thinking this whole market could be a trading range here. If it trends up around 1.2 or preferably higher, then I think a bull market's still alive. We're going to go higher. So this 10-day trend is not a good sign. So I see it improve on rallies where the actual market goes up, trend goes up with it. That could happen here, but it probably won't. So I'm thinking if we get back to the previous highs, which I think that's where we're heading now, is probably going to be resistance. Then from there, we'll have to reevaluate what goes on next. So this year will be kind of a tough year for the market. I don't think it's going to be a great big bear market. I think we're just establishing a trading range, more of a sideways market than a down market. So I'm thinking there's actually, I think I got that chart. Here's where I'm thinking we're going to go. Right here, this chart. Okay. This is skipping ahead a little bit, but here's where I'm thinking where the equity market in general is going to be okay. I think it's going to more or less move sideways, but I think the HUI, anyhow, the middle window, this window right here is the monthly HUI, which is basically the gold bug index, compared to the NDX, which is basically the NASDAQ, which is the NASDAQ. And there's a 12-year cycle here. The last time this became bullish, where gold stocks outperformed NDX, went from 2001, or it looks like they'll call it 2000, ran up 2012, and that's where gold stocks outperformed the NASDAQ. Then from 2012 to current 2024, NASDAQ outperformed the gold stocks. And I'm thinking this is flipping around right now on a bigger time frame. So I think that's where the money's going to stay in the market, just going to move itself out of the probably the equity market. So I think the NDX market this year is actually underperforming the SPX, and that's not a good sign. You want the NASDAQ to outperform the SPX, but the NASDAQ's actually underperforming the SPX. That's another reason why I think the equity market's going to take a rest, and some other market's going to take front and center, and I think that could be the gold stock index. So we'll see if that turns out.
You know, we've seen things like, sorry to interrupt him, but like on your point with the gold, like I kind of see that as well, that it seems like gold is so much, it's more attractive really than I think it's been in definitely recent times, right? Because usually you do these
12 years.
Oh, yeah.
Yeah, 12 years. So let me, I don't have I have a cycle here. I didn't do it. But anyhow, this is one of the reasons why this HUI monthly index and stuff. So you're going to see stuff, so these gold stocks are starting to pop all over the place. If they pop too hard and they're going up too fast, that's when they start to get to. But we're a long ways from that. Matter of fact, take this a step further. This chart goes way back. Goes the bottom window is XAU gold ratio. So it measures the gold stocks against gold, and it goes back to 1993. The next window up is the monthly XAU. And so if you notice, XAU from 1993 to, 2024 is just a gigantic trading range. And so I'm thinking we may, at least at a minimum, we're going to go test this high of 2011, 2012, right up in here. And I think we actually may exceed it. But if you look at the inflation-deflation ratio, this is pathetically low. We're actually going back to 1993. We just hit a new low. And the way you can tell that you're at a high on the gold issues is when this ratio rallies up pretty fast. If anything above the monthly inflation-deflation ratio, RSI, is this window up here. And if you get above 60, which is all these red lines across the chart, so remember, this chart goes way back to 1993. We had 3 of them hit back in 2020, 21, looks like 22, and the market consolidated. Right now, we're at 0.37. RSI is around 38, round off numbers here. We got a long ways to go before we hit 60. And how high will that go? I don't know. But with the inflation-deflation ratio, if it does zoom up here to 0.3 or higher, and as RSI gets up to 60, then we're due for a consolidation at least, and maybe a big consolidation, don't know. But we're not even near that level here, so we got a long ways to go. So even though we rallied up, we have rallied up, but I'm thinking we're still early in this whole cycle. So is gold stocks gone up too fast here lately? Maybe, but I'm thinking since we're at this trend line right here, I hope you can see this. My arrow pointing at it. This trend line goes back to 1993, and we're just busting through it, and we need a sign of strength to do it, and that's exactly what we're doing. And this head and shoulders pattern, what I'm calling right here, has an upside target 255, and the previous highs was about 225. So. Anyhow,
Tim, do you have any? Can you hold? Okay. Folks, we'll be right back with Tim Ward after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shoup, we're joined right now by Tim Ord of the Ord Oracle. We're talking about gold contract of 1.52%. You're taking a look at least over at our friends with Direction. I mean, take a look at Nugget. That's the Gold Miners Bull. This is a 2x ETF. That's up 4.31% today. You look at the Junior Miners, which you've spoken about a little bit with Tim Ord here. I mean, it's up 5.63% today. And you take that out on a longer term just to see what's going on. I mean, this is a fantastic movement in the Junior Nugget and the Junior Miners since February 28th. I mean, these leverage ETFs are kind of interesting, especially when you're like, hey, I don't know what to pick. Do I just pick one equity? Do I pick a basket? Why not check out something like that? Tim, what are we looking at with gold?
Yeah, it's actually going to get better.
Heard, yeah.
Actually, when time comes, when I say, we about had enough, people are going to hate that word. So, because that's what happens at tops. It's too good to be true, and things need to back off. But anyhow, this chart here is looks at the bigger trend. We got a buy signal back in, I think it was March of last year. So the market has actually rallied over the last 12 months. I don't know, it looks like about 25 range. So we're up around 45 range now. So that's almost 100%, not quite 100%. But, we're getting a little extended. You're starting to run into the upper Bollinger Band here on both of them. So you can see maybe a jump and a comeback test. But anyhow, you're going to see a sign of strength through this top one is the GDX, and at a minimum, we're going to rally back up to these old highs, and maybe we go straight up there, then come back. I don't know. We'll have to wait and see. But this is kind of the intermediate term. The bullish signal on the monthly time frames are on buy signals, so we're good for there. This is a chart that we talked about on a longer term scale. When this RSI on the monthly time frame on the inflation-deflation ratio gets up around 60, those are usually intermediate term highs, if not even long-term highs. Matter of fact, it picked out the high back in 2011, 2012. It got way up there, and the market went down for a number of years. So, so right now we're not even close here for a signal of any major consequences. So. Things are really cheap because inflation ratio is actually, if you look at this right here, we're at the lowest level we've ever been going back to 1993. That's really unusual. So things are cheap. Gold stocks are really cheap. So here's why I think it's going to happen. We covered that. And let's get back to this chart. This is a shorter term chart, kind of measures the strength of it's a 50-day average of the up-down volume. As long as this indicator is above zero, the uptrend's intact, and all this green shaded areas are times when this indicator was above zero. And we're up here about plus 18, but I'm thinking we're just going to stay up in this range, be something like this over here, or something like we stayed above zero in this range for 16 months. Here we stayed about 5 months. Here was 7 months. I'm thinking we're going to stay up pretty much in this range for pretty much, I bet, rest of the year here. So gold stocks, I think, are just going to remain strong. They're going to be rotations, with some of the leaders will take a rest, and some of the ones that are starting to come off the bottoms are going to start show significant increases. And I've been kind of saying that for the last 6 months, and now it's starting to become obvious. I put it this way, not obvious, it's becoming more noticeable. And I bet a year from now, it'll be even more noticeable what it is now. So anyhow, that's what I'm looking at. I think gold stocks on the bigger time frames, potentially over the next 12 years, could be a good place to be.
Yeah.
So, and if that changes, I'll change with it. But that's prediction right now, and there's really nothing of any consequence of a top in here. We're just, if you look at GDX, which is the top window here, we're just finally just breaking out.
Yeah.
And we got this indicator. If this indicator here at the bottom window falls below 0, that's the time that you'll probably pull back to the neckline. I don't know how we're going to do it, but we could remain strong here for until July is what I'm thinking.
Definitely.
Not every week's going to be an up week, but a lot of times July through October there's a consolidation phase, just seasonality wise, and I think July is not too far away. It's 3-4 months away, so not a long ways. And anyhow, that's how I'm doing it. But,
yeah, and I think now with all the uncertainty that exists in the market, there is and the potential for contracting growth just in the broader economy. I mean, something like gold now starts to become like an attractive investment, and I think that's what we're seeing. I mean, genuinely, we're about to hit all-time highs in the gold contract again. So
yeah, if you notice, nobody's talking about it.
I agree. Yeah. Yep.
Yeah, I mean, you're not hearing on NBC, CBS. When those guys start talking about it, you get late in the game.
Right.
So, and we have none of that right now. Nobody's even, other than radio shows like yours, with kind of deal in investments and stuff, are talking about it. But the mainstream media hasn't picked it up yet.
Well, and that's the thing with a lot of the other shows. It's always just Nvidia, Tesla, or something like that. But I mean, this is. That is so volatile now. This I think really does, like a gold investment, or at least looking into it, makes some pretty sound fundamental sense as well. On top of these fantastic technicals that you're bringing to us. So,
that's the reason why I kept looking at the bigger time frames here.
Yeah.
Because I think something big's coming on. That's the reason why I presented this chart. Will it work out? Not sure, but it has all the ingredients that it may.
Totally.
And especially on this chart going back to 1993, we're breaking above this trend line right here. We couldn't hold it here, or this is a really breakout. But at least we get back to 225, and things do get on the monthly time frame, because I watch the monthly time frames a lot, especially when they're saying something. And as far as the top goes, this indicator is not even near intermediate term top.
Yeah.
And so it's intriguing. So I'm thinking, if you bought a gold stock today, would you be profitable or be buried in 6 months? I think you'd be profitable. So
yeah,
we'll see how that turns out. So did I answer all the questions about trend? Did he?
Yeah. No. I think that was totally satisfactory. So.
Because that trend, I think, for the year is giving a warning that this is. Matter of fact, our next show, I have a 100-day trend. This is actually at a level not ideal for the market, and I could show that again and telling me that equity market. I don't think it's going to be in trouble, but I don't think it's the best place to be. So I'll show that next Tuesday. It's a longer-term chart, and it's just not conducive of panic, which is, again, panic is good for the market, because panic drives energy, and if you have energy in the market, it's good. So, and right now we don't have a lot of panic in the market, so to me it's going to be a lackluster market.
Fantastic. Well, guys, go over to ord-oracle.com to get more from Tim. Tim, thank you so much for joining us. We'll see you Tuesday.
All right, thank you.
Fantastic. Folks, we got the SPY trading off about 0.09%. JNUG, our friends over at Direction, trading up 5.75%. That's a junior nugget. That's a bullish 2 times ETF. Composite off about 0.28%. Dow Jones Industrial off about 0.17%. We'll talk a little bit about Hood, GME. Would have been nice to buy those puts yesterday. You're off about 23.04%. Can't believe people still fall for it. Folks, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. We got a short segment going on here. Take a look real quick at GameStop. Yeah, I mean, this is basically like what we anticipated was going to happen yesterday, right? I mean, huge sell-off. I wish I remember what those premiums were. I'll have to watch the show yesterday because I know we were talking about like if you got. I mean, I was a little bit cautious on it because these guys can just pump this thing till Kingdom Come, you know, and you're never really sure. But I guess when you're in a market that, I think is concerned about liquidity, you know, that doesn't always persist, right? When everything's good and you're in this like super long bull market, I mean, jokes like what GameStop's doing can persist. Right, and then you get rug pulled immediately, but it is kind of much more like, you know, just rinse off and then get out. So, I mean, again, this thing, the fact that it's going right back to that support of 20. I mean, in reality, the thing should be probably like 60. I mean, honestly, what they should do is just liquidate their assets and pay off debt holders and shareholders because they're not going to be able to compete in what they do. Buying the Bitcoin, why buy GameStop for exposure to Bitcoin? What is the point of that? And all they're doing is just doing it via dilution or just adding more debt on. So, you know, seriously, you buy GameStop for the Bitcoin, the answer is why? Why not do micro strategies? You know, I mean, he still dilutes you by buying a bunch, but at least it's not issuance of new sales, right? He's doing those weird 0% converts, which are gnarly, and I can't believe people bought those, but hey, it worked out for him. I'm not, you know, Sailor's good at that kind of stuff, but for GameStop, it just doesn't make any sense. And I mean, even the concept of issuing more Class A than to use those proceeds to get debt is crazy in and of itself. So 22.83%, it should be punished even more. That net income is not going to remain elevated the way it was last year. That was just a one-off kind of deal. They're contracting in their revenues. Folks, thank you so much for joining me. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien. Oh, and Larry live trading.